This episode of Talk Your Book is proudly brought to you by Honan, providing a complete range of insurance, risk and financial solutions.
Yeah. Fundies called me up, told me to take a look, but stay stubborn as bulls and talk their own book. Get the money, get the money, get the money.
Well, Michael Goldberg, crowd favourite for Talk Your Book viewers. Thanks very much for coming back on the show. Maybe we'll get into your stock pick in a second, but maybe you could just give us a brief outline of Collins Street Value Fund and what you guys have been up to.
Sure. Thanks, Chris. Thanks for having me back. We've got two funds nowadays. Our flagship fund being the Collins Street Value Fund. It's been doing really, really well. Over the journey, over the 6.5 years, I think we've generated just under 19% per annum, which is exceptional. Had someone asked me when we launched the business if we'd be satisfied with 12 or 15%, would have said of course we would, so we're thrilled with what we've been able to achieve. Certainly uncertain times create opportunities for people like us value investors, so we've taken advantage of those opportunities, but thrilled with how things are going. We also just launched a new fund to, I suppose, tap a new market in convertible notes. So convertible notes has always been a part of the flagship fund and it's always generated really good returns for us. But because our flagship fund is a liquid fund and convertible notes are contracts that are illiquid, we were limited to how much we could put in that, in our flagship fund. So we've created what I call like an overflow fund so that our investors can access these deals that we're getting coming across our table, but which we can't invest in through the flagship fund because we've reached our capacity for illiquid businesses. So yeah, very excited about both. We launched the new fund last month, so I don't have any returns numbers for you, but certainly we hope that we'll generate, really solid, hopefully double-digit returns over the journey, including a relatively fixed distribution or income. So that's something a little bit different and something we're quite excited about.
And so the focus of that new fund is really what, high yield, and then you sell down the equity once it gets converted. Is that the plan?
Yeah, pretty much. Look, we're investing in companies that we think have significant growth or in sectors that have significant growth. We tend to come to terms to lend the company money for, let's call it 2 or 3 years. And during that period of time, if the company does really, really well and takes the money that we give them and grows to the next level, then we're entitled, or we feel like we're entitled to participate in some of that upside. So, let's say a company's trading at 10 cents today, we'll come to them and say, hey, let us lend you money for the next 2-3 years. We're happy to have a conversion price of, call it 15 cents. If in the next 3 years it gets well above 15 cents, and we would convert that loan into equity and then sell that in market and realize the difference. So yeah, it's a little bit different. There's not a lot of players in the Australian market, I think, that are focusing on convertible notes, but we're quite attracted to it. We like the downside protection of the debt and we like the upside protection of equity. So I feel like you get a bit of both worlds, the best of both worlds.
And what stock did you want to walk us through today?
I thought I'd talk about Astron. It's a stock that we actually engaged in via a convertible note, not for the new fund, but for our original fund. They're a small cap company that's been around for quite a long time, actually. Remained a small cap stock in a sector that's not really, I don't think, very well understood. They predominantly are focused on the Zircon space. And normally when I mention Zircon to someone, their eyes will glaze over for one of two reasons. Either they know what it is and they're bored by it, or they have no idea what it is. Look, they have projects as well in Senegal. They have some facilities in China, but 100%, absolutely. The main focus of their business today is the Donald project in country Victoria, a little bit northeast of Horsham. So historically, the business has done many, many things. I think the founder, the late Mr. King, was one of the early Westerners to go to China in the 1980s and started a business there and recognized the opportunity. They had a processing plant for zircon and mineral sands back 10, 15 years ago. They ended up selling that for about $250 million to a French consortium, and they distributed those funds because at the time they didn't need them for any progression within the company. But again, right now the focus is their Donald project, where they have one of the world's largest undeveloped zircon mines. I believe it's the largest in the Southern Hemisphere. So we're very excited to see what happens there. The focus is, I believe, zircon, but certainly they're gonna dig up as well rare earths, which is quite topical nowadays, and also some titanium.
And so, full disclosure first, I have a small shareholding in this fund, which it's bloody hard to get stock, Michael. So if there's any listeners out there looking to sell some stock, preferably below market prices, reach out. So tell me, the zircon market, what's it used for and why do you like it?
Well, zircon is the boring part. Zircon is used predominantly, or almost entirely, for ceramics. So if you think about your kitchen, you think about your bathroom, the tiles, the sinks, the bathtubs, all of those things require zircon as a key ingredient. Interestingly, I think most of the focus recently hasn't actually been on the Zircon space. I think most of the interest recently has been on the rare earth space because of the increased usage and popularity of electric vehicles, which is one of the key ingredients in the battery, and in renewables energy, especially wind turbines as well. And rare earth by itself is actually an interesting enough reason to invest in the company. You know, Iluka came out not that long ago and said that they foresee significant supply shortages in the near term.
And did China just announce overnight they're restricting exports for rare, because they would just absolutely dominate the rare earth
100%,
market.
and that's the key point. I think that also explains why supply is so tight. I think China has either a controlling interest or a significant interest in just about every global rare earth project.
It's well over 90%, I reckon. It's something ridiculous.
I believe so. So, you know, if you're concerned about electric vehicles, it's not such a big problem. If you're concerned about wind turbines, also not such a big problem. But for the US Department of Defense, they use rare earths in some of their technology, in some of their defense technology, and for them it would be a real issue to be reliant entirely on China. So really, really tight supply, not surprisingly increasing demand, and as I said, Iluka said they see in the next couple of years there's going to be a real problem with delivering the amount of demand that's coming onto market. You know, I was thinking for myself, you know, when I was last in the market to buy a car, I thought, why am I going to waste my time buying an electric vehicle? They're not efficient, you can't drive very far. But, you know, we're back in the market at the moment, and all of a sudden, I'm thinking, you know what? Electric vehicles make sense. So if me, the most right-wing, you know, non-politically correct, not concerned about, you know, all of these sorts of things, is suddenly, you know, thinking about getting an electric vehicle, then it sort of makes sense to me that there's, you know, if I'm buying into it, then I'm sure many, many other people are buying into it as well. But to get back to Zircon, it's a similar story, except in Iluka's same report where they forecast shortages of supply in rare earths coming down in the next couple of years, there are already undersupply. There's already higher demand than supply for Zircon. So you know, I was having a read of the Iluka presentation 6 months ago. It was on a Sunday, and my 9-year-old daughter came in and she was looking for attention, and good for her. I shouldn't be working on a Sunday anyway. She sat on my lap, and I thought, you know what, this is an opportunity to work on her reading comprehension. And I was reading the Iluka prezzo, and they made reference to putting their clients on allocation. And it sounds like a weird thing, like what does allocation mean? So I gave the one pager to my daughter, and I said, can you explain to me what allocation means? She took a minute or two to read it, and she came back to me. And there's sometimes, you know, I think most of the time your kids are precious little gems that you need to protect, but every now and again they come out with some deep, deep wisdom. And she said, Dad, it means you get what you get and you don't get upset. And I thought that's brilliant. That's brilliant. But you look at global supply, and in the next 6 years, it's anticipated that 40% of supply is going to come off. So Iluka about 10, 15 years ago made a discovery in South Australia. It changed the game for the Zircon space. And since then, they've been supplying about 25% of global demand. So huge. But they too are coming off in about, I think it was 2026 is about when we expect them to come off. So, you know, there's a significant undersupply. There are no obvious or easy alternatives to Zircon for this. And so we're actually really excited about the Donald project specifically, and, well, more generally Zircon, but specifically the definitive feasibility study that they're doing now, that Astronaut are doing now, to shore up and update what they'd previously done in 2013.
And so talk me through the Donald project. I know you mentioned they haven't done the DFS yet, but you know, a number of approvals are already in place. Where are they up to with that Donald project outside of the DFS being done?
Look, they're one of the most advanced Zircon and rare earth projects in the world in terms of permitting and whatnot. They're very close to infrastructure, being in country Victoria. They've got the water rights in place, which is no small thing. No cultural heritage issues, no land title issues. They're well advanced with the Victorian government in terms of getting their permits correct. And pleasingly, they've also got strong community support. So they've ticked a lot of the boxes that you need to get ticked before you can go to the next stage. But to your point, you know, they are engaging in a DFS now, and their approach to how they're going to mine is going to be different to how it would have been historically. You know, none the least because rare earths 10 years ago was a non-issue, and rare earths today is more significant. But they did a DFS in 2013, and in 2013, despite all the challenges around this specific site and generally globally, they came back with a valuation, a net present value of $1.4 billion US. And we're talking about that in the context of a company that now has a market cap of about $70 million. So, sure, there are risks to these sorts of studies, but our take is that this thing's just been so neglected, so flying under the radar, and Zircon is just so boring that people don't appreciate what the potential upside might be for this business.
And what were the Capex numbers for that original DFS? And I know it's impossible for you to predict, but back of envelope, what sort of Capex numbers are you expecting for a project like this?
Look, I've not looked at the 2013 recently.
Well, ballpark. What
look,
do you sort of expect?
If you twisted my arm and you said, Michael, give me something.
Yeah.
I'd imagine 200-300 million. Again, I understand from conversations that we've had with Tiger Brown, the new CEO, that they're looking to do the project in stages rather than doing it all at once. And I think that makes a ton of sense. I mean, despite the fact that it's a 40-year mine life, and despite the fact that they've got enough zircon in there to single-handedly supply the entire world's demand for 5 years, it doesn't make a ton of sense to jump in and just pull out as much as you can, irrespective of the costs. So they're going to do it in a two-stage process. I think it's going to be about $200-300 million in Capex. But I suspect, given the markets, both for rare earths and zircon, that the vast majority of that financing will come via offtake agreements and debt financing. We're always concerned, of course, if you go into the markets and you're raising equity when share prices are super low, that's highly dilutive. And there's no way we can know what the share price will be when the DFS comes out. But my expectations are that the vast majority of whatever they need will be raised through deals with people who are interested in the final product or debt financing.
And it does look to me like it is come raised, but you think they've got enough money to get through the DFS?
I don't want to be on record saying they don't need money, because who knows?
Well, they don't have a lot of money.
Well, that's true. That's true. So we had a chat with management. We had them come into the office and we had a conversation. We said, look, we've liked your business for a long time. We've liked your business since the old CEO was around. We've owned you at periods of time. Obviously, we can't buy it for the fund because there's just no liquidity. Yeah. As you mentioned, it's impossible to get this stock.
Christian Invest can't get it. I think it's fair to say Collins Street Value Fund can't get it.
I don't know, your balance sheet's about the same size as ours.
I wish.
So we said, look, we appreciate that the DFS is coming up. We don't know what you're thinking about, but would you like to do a convertible note? So we asked him, how much do you need to get from where we are to where we need to be? And he said 5 million. So we said, fine, we'll give you 5 million under these terms.
And what are the terms? What does it convert at?
So we started conversations with him when the share price was around about 40 cents.
Yeah.
And again, we recognise that the capital we're providing is to provide growth and to get them to the next stage. And so we think it's fair, if we're investing in a business that we like, to make a conversion price above the prevailing price. So it was 40 cents when we started talking. We thought 50 cents was about right. He thought 56, 57 was about right. And we negotiated and came, I think we settled on about 54 cents.
And it's about, what is it, about 56 today, isn't it?
It's about there. It's there or thereabouts at the moment. So, 2-year term, 10% interest rate, secured against some of their assets, Donald specifically.
Great.
And we're really excited about what happens next.
And is Tiger Brown the coolest name in ASX listed company? Like,
if there is a cooler name, I haven't met him yet.
I don't know if he should be in retail. I think he's in Zircon. I think he should be running some sort of a tech business.
Well, if he's looking for the excitement, he can focus on the rare earths and titanium. And
that's right. Now, I speak to some companies that have Victorian mining projects, and they say the approval process in Victoria is more challenging than companies that have a lot more exposure to mining, WA and Queensland. Is that your experience? And do you figure that a project like this might take a little bit longer to get up, or it's not something you factor in too much?
Look, this is a project that's been taken a long time to get up.
Yeah.
And they've had good discourse with the Victorian government. I haven't heard from Astron that they've had any challenges from the Victorian government, but I certainly have heard anecdotally from other companies that dealing with mining jurisdictions can be much easier than dealing with Victoria. But I think it's also worth noting that this is not a gold mine. This is not a pollutive sort of process. Rare earths and mineral sands are pretty low maintenance on the region. And keeping in mind, again, this is in country Victoria. This is land that was otherwise used for grazing on or farmland. And given the technology and the process of mining zircon and rare earths, there's no reason why they can't rehabilitate the land as they go. So by the time they're done with this mine in 40 years' time, there's no reason to expect that within a year or two, it'll be back to what it looked like before, which is basically open grazed farmland.
And you mentioned a couple of things coming up which could lead to a re-rate of a stock like this. You mentioned the DFS, and potentially after that there could be an offtake and perhaps debt arrangement. Are they the two big milestones that could lead to a rewrite, or are there other things people should keep an eye out for as well?
Look, I mean, they've got a project in Senegal. We don't value that at anything, but who knows? Perhaps they'll have they'll do a drill and find something magical, and all of a sudden it'll re-rate. They've got their processing plant, in China, correct.
Are you putting any value on that?
Look, I note that Astron on their balance sheet put it north of 10 million, and that feels about right. But again, in the context of what they potentially will generate out of Donald, it's dwarfed. So it probably won't make a difference. Handy asset to have for sure.
Yeah.
If you're digging up zircon and you want someone to process it and refine it, and you've got your own refiner, well, that's certainly handy.
And that will be the plan eventually, albeit they will have more supply than they can process in that Chinese facility.
I don't know. I don't know. I also don't know what the logistics are of shipping to and from China.
Yeah.
I do know that China is the major consumer of zircon in the world, so it does make sense, given their relationships there over the last 30 years plus. It makes sense that they would use China as a base, if not the main base. But I guess we'll have to wait and see.
Yeah.
In terms of catalysts, I think it's all about the DFS. The DFS comes first. If they can shore up the reserve to look anything like what they did in 2013, if they can get an idea of what their mix is going to be, how much zircon, how much rare earths, how much titanium, that'll give them a better sense of what their costs are going to be. It's going to give them a better sense of what their cost of financing is going to be and what their potential profit's going to be. So first and foremost, DFS is number one. Number two, once with the DFS, we'll see what the efficiencies can be. And then ultimately, like you said, what are their financing arrangements going to be? Again, I would be shocked if the majority of it isn't via offtake agreement. But who knows? Whatever the best deal is at the time is the deal that they should take.
Incredibly concentrated register. I mean, almost a private business that's listed, really. Maybe talk us through just how concentrated the register is, and if you think it'll stay like that, or if you could see that the major shareholder selling down at some stage. Well,
the major shareholder is also the managing director and his family. Between Tiger and Kang Rong, I think they've got some $52 million worth of stock. I know
they've got about 75% of the
it's huge.
business, something.
Something like that. And again, Tiger's dad found this business, and I think he listed it to get better exposure to different markets to sort of create that sense of security and safety, being a listed company relative, rather than just being a private company. And my sense is that Tiger views this asset as an intergenerational, brown heirloom to go forwards. But ultimately, taking it from $100 million market cap, it's not even there right now, to let's call it $1 billion market cap. I'm sure at some point along the journey there's going to be a capital raise, and no doubt Tiger and Miss Rong will be diluted. But I have no expectation that they'll be looking to sell down that stock to fund their lifestyle. That just doesn't seem to be their personality. So, look, they'll maintain a significant stake, possibly a controlling stake for the foreseeable future. But again, that means that they're motivated and their interests are aligned with us. So, if Tiger's looking after his own best interests and those best interests happen to be aligned with mine, then I can be fairly confident he's going to do the right thing.
And that holding company for that shareholding is Hong Kong based.
Yeah.
In the current sort of Cold War climate that we're all living through, does having a major shareholder to an Australian asset being based in Hong Kong, does that bring geopolitical challenges to approvals, or it's a non-issue from your perspective?
I've learnt over the journey that it's not a great idea to have a strong public opinion about geopolitical issues, no matter which way you take. There's no winning no matter which way you take. But look, on the right-hand side, you've got people saying that China is the existential risk for our generation.
Yeah.
And on the other side, you've got people who are saying that there's nothing to see here, it's not a big problem. So I think somewhere between where we are now and whichever extreme we end up at, there'll be plenty of time to make decisions and make adjustments if necessary. I know, having brought this up with both Tiger's dad and Tiger more recently, they both said, look, we are aware of potential risks across our entire business. If at some point it becomes something that we need to change, then that's something that they would obviously be open to from the company perspective, and I believe also from their private capacity. But trying to make big changes or big decisions now on the basis of what might or might not happen in the future, it's costly, it's time consuming, and it's not normally necessary.
Beautiful. Well, it's a great story. Explained it perfectly. So thanks very much. I look forward to watching this one.
No worries, Chris. Thanks for having me again.
Thanks, mate. This episode of Talk Your Book was proudly brought to you by Honan, who go beyond a transactional insurance broker to deliver better outcomes for their clients. If you're enjoying Talk Your Book, make sure you subscribe to Chris Judd Invest.